We have had a really strong year in 2025, 22% growth in PBT, and we've just reported 24.1 billion shillings in terms of PBT. That was on the back of 19% growth in our top line, so revenues, up to 60.3 billion shillings. This was driven across the board, which reflects the expansion that we've had in our retail business. So we've been opening branches, we've been acquiring customers. We put on about 224,000 customers just last year alone. And that has translated into earnings as we expanded the business. We've also been looking at our insurance partnerships, so our bank assurance business has also done well. We had over 380 billion shillings in profitability just last year. And we have also seen a very strong performance in our wealth management business. So some of these non-banking subsidiaries that have done very well, almost 223%, right, to 99 billion shillings in assets under management. And that translated into over $500 million shillings in terms of earnings from 120 million the previous year. So that has been a very strong story. But our corporate and institutional banking business, which is the mainstay of our business, has also done well. Right, while the asset growth was relatively flat, we still had 24% contribution coming in from new business lines, in particular our oil and gas focus, our trade finance focus as well, and our leasing business. So that has been a strong story. The Imara journey began back in 2016, 2017, and we were doing several things in the first cycle, right? We understood that we needed to fix what we call the basics, right? We appreciated that we had a very strong credit focus. We wanted strong on the transaction banking side. We wanted strong on the sales culture that we needed in the business. So Imara One was dealing with those building blocks. So we spent a lot of investment in terms of building that capability. That has then allowed us in Imara 2 to then start looking at the focus on new markets, right? New segments. In particular, we were looking at digitization and the opportunity that it brings. Even though this had started in Imara 1, we're really building it out in Imara 2 so that it could then enable the growth that we were looking at in the retail and business banking space in particular. And so we also had a focus then on those early building blocks, defined the customer value propositions more sharply in Imara 2. And that then led us on to Imara 3, which started in 2024. And we are now on the tail end of that cycle, right? It's a 3-year cycle. So 2026 is our final year. In 2025, we have made some significant strides in terms of expanding our retail network, right? We are now at 71, 72 branches odd. And we are really bringing in the customer numbers that are speaking to the initiatives that we have in this space, particularly driving the current accounts and savings account balances that come with customers who are looking to move their money, invest their money through I&M. This has been underpinned by digital. We have been building out our digital business, making sure that we're not only just looking at how customers can onboard easily through digital platforms, but also how they can actually finance themselves through these platforms. So the 30-day loan that we introduced in the tail end of 2024 really came into its own in 2025. We have deployed over 20 billion shillings through the digital platforms. Just on the 30-day loan, which is a solution that really took hold in 2025, we did about 5.5 billion shillings in terms of disbursements. So these are short cycle, repeated loans, and they are really helping people with their day-to-day financing for needs that they have. So we are just about to embark on our Imara 4. And here we are going to be looking at what the landscape is telling us we really need to be focusing on. So that ideation is beginning now. So when we are ready, we will come to market and say what our focus is going to be. Remittances in particular have a significant role to play in our African economies, but the vast majority of remittances actually come to support the families that are linked to the people who are living outside the country and are sending money back home to support needs, right? So what you really want to do is support the quick movement of those funds, the cheaper movement of those funds, so making sure that that last mile connection is seamless and inexpensive. And that means that you have to be doing it on increasingly improved rails for payments, right? With different partners that operate in this space. So this is a capability that we have been building. We've been tying up with remittance partners. We're now doing 25% of the revenue of the remittances that are coming into the country are coming through I&M. This has benefits obviously for us from a foreign exchange perspective because it supports the other side of that equation, which is our importers who are looking for foreign exchange. But it also means that we are able to increase the ecosystem of customers that are linked to remittances. So that entire ecosystem is one that truly creates value for not just the anchor client, but everybody along the chain. We're also looking at how employees within that ecosystem can access personal finance. Right now, collectively, they have contributed in Kenya shilling terms 24% of the PBT for the group. But the idea is to move that higher to 25 to 30%, right? Of course, remembering that Kenya is not standing still, it's also growing. So it's a pretty tough call. Kenya grew by 22% in PBT alone just this, 29% in PBT alone just in 2025, which then means that those businesses have to be growing a lot faster. Now, some of them are coming off a small base, so we appreciate that they have to acquire customers at a faster clip. They have to grow their businesses at a faster clip as well. But they are certainly keen on increasing their presence in those markets. Moving into Tier 1 for Tanzania, for Uganda is an ambition that they should be able to complete in 2026. They're already Tier 1 in Rwanda. So there it is really a focus on increasing the kind of returns that they're generating out of that market, extending their reach into unserved spaces, particularly in the SME and retail space as well. The fact that we already have a presence in these countries as I&M provides an immediate connection that we can then leverage to also drive funding for financial institutions, supporting trade finance and wealth management and custody business for our clients. You have to be thinking about the value that any business you're investing in actually looks to derive. Make sure that you understand their business model. Don't just simply look at the trend and say that the share price is moving up, therefore let me jump in and so on, right? Understand, how does this business actually generate value? Then you also have to look at how you finance your investments, right? Look at the kind of returns that you're expecting on your investment. Then you can mirror that with an approach to funding that investment that makes sense, right? Otherwise, you could find that the cost of funding alone could eat away all of the returns that you have. Then you have to be disciplined in terms of your execution of your strategy, right? If you are getting into an investment, you expect that it could make gains or it could make losses, right? Be disciplined about where you say you're going to take your losses and where you're going to take your gains, right? Be disciplined, cut your losses, live to fight another day, right? Don't think, oh, it's going to turn and so on. You actually have to be disciplined about these approaches. But I'm a big fan of value investing. Understand the business that you're investing in. Even as a small shareholder, you are an owner of that business. So understand what that business is doing before you actually get into the business.